The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, overall, on Friday, we wrapped a pretty positive week with a little more strength in the grain markets. We did kind of fade, but wheat trade was again the upside leader, while in the livestock trade, we found a good day in cattle again on Friday. Hogs, though, another down day, so maybe some spread action there. But, overall, again, a pretty good couple of days here in these markets as we're nearing the end of the month of April. Joining us now to talk about what's happening and what we're seeing in the trade, Christy Van On Sheesith with Van On and Company is with us. Christy, welcome back to the show. It's good to catch up with you again.
Yes, it's always great. Thank you.
Well, as I alluded to, hey, you know what? Not a bad couple of sessions here, especially this wheat trade. I know a lot of this weather concerns, but we put a decent premium back into all three of these wheat complexes, really, and kind of getting us up against some pretty good overhead resistance, it looked like on Friday, like that 200-day moving average kind of thing. But overall, hey, I'll take a bit of a wheat-led rally here the last couple of days, right?
Yeah, and that's the thing is that for the, a lot of these movements need to be led by wheat, it seems like. And so we're finally seeing that happen. You see the wheat complex anywhere from, upper 40s to 65 cents higher on the week. So a lot of support in here. I also think this has been a great opportunity to play some catch up on some sales for spring wheat that's in the bin right now. I know that there's a lot of people that were behind on marketing just because at the point that they were at to do some marketing, they just did not feel confident in their crop last summer. And so that's been one of the most difficult things marketing wise for myself moving forward has been marketing. We're behind as a company where we typically like to be. We're playing aggressive catch up right now at this price point. Once we got above $7, it seemed like some more buying came in. So it has been a friend to the grain markets, I believe. The trouble that I have is that we have reached a point in the calendar now that every weekend is like a intense weekend, right? Every weekend you're going to be going in here, and whether it is friendly or not friendly on Friday, a lot can change by the Sunday open. And so we do have this friendly rhetoric around the market. We do see some great technical action, but some of this has been brought on by a lot of moisture that's been in the forecast. So if you come in here and dry out that forecast on Sunday evening, I'm worried that where are these bulls going to come into? And then on the flip side, as we progress through Monday's trade at the close, after the close on Monday, we're going to get planting progress. And there's been a lot of chatter that there's been aggressive planting through Illinois, Iowa, parts of Minnesota ahead of these rains. And I'm fearful that you can see just how hard guys can push these days and see a really high number. Now, it's early enough in the season, but we have to remember that. So when you're looking at marketing and you're thinking about targets, a lot can change in 2 days where the markets are off right now in this time frame of the calendar.
That's why you got to be smart and watch things closely, even as you're busy with planting. May options expiration on Friday. Do you think that played a role into some of the fade in the grains across the board as we got to the close?
Yeah, I really do. So if you look at seasonal tendencies, especially for the corn market, well, really for the corn market, this ending here into May is kind of where we try to find a bottom and then rally out here, starting in the beginning of May and moving forward. And I think option expiration for the May contract plays a big role into that. So seasonally, we're going to flip this script here pretty soon for the corn market to find that buying. Takes a little bit before seasonally that happens into the soybean market. But overall, I just feel like you can get through this May option expiration. There are some still having the ability. Obviously, first notice is Tuesday, so there is some trading still happening off of May tomorrow, or I should say Monday, and then we'll move forward after that. And so hopefully that's kind of the final push into this, and we can seasonally get moving forward. There's just a lot of moving parts, and I'd like to preach right now that corn has all these small friendly stories behind it. Like there's a lot of them out there. You can kind of pull them through the woodwork and say, hey, this is a friendly aspect of corn right now. It's nice to see this. Export sales were great. All of those little tidbits, putting them together. But there's not that one big story to give it a push right now. And so that makes it just a little bit where you're wanting to be friendly corn, but wanting to be kind of cautiously friendly corn, because a lot can change in one day right now for the markets.
It doesn't feel like in many of these grain markets, wheat especially, but even quarter beans too, as I look at it, it doesn't feel like we're really inverted. It feels like we still got a little bit of carry here. Would you agree with that, or am I misreading that, Christy?
Yeah, I think the nice thing that we've been looking at, we made a push on spring wheat marketing here this week. And one thing to look at is the large carries right now in spring wheat from September to March. So if you're holding that wheat right now, there's like a 24 to 26 cent carry to be doing some marketing into like a March HTA that should cover your delivery periods of Jan, Feb, March. And typically you can see some friendlier basis for wheat into this February timeframe. The last few years, you have not seen the basis really give any opportunity for spring wheat. I just feel like it's been very quiet. The basis has not moved a ton, but it's been nice to see that. So that's kind of where I've been transitioning guys to say, hey, look at these deferred contracts. On the flip side, on corn, you're looking at a carry from D's 24 to July 25 of 28.5 cents, 29 cents. The old logic behind it was that if you could get a 30-cent carry to roll your contract here from December to January or July on any given year, that's a good carry. Now, I do think it can get wider. It got wider last year. I think it can get wider again this year at some point because of interest rates. But these are early opportunities. If you're looking at here, one of the conversations that I've had a lot lately with producers, our bankers are calling them and asking them about cash flow, renegotiating some operating loans, getting your feel on things. And there's been a lot of them that said, I would like a little bit more on the books here for some marketing. And if you look out to July 25, if you're a person that stores your grain or has the ability to store corn, you're over $5 into July 25 corn. So I know that has been that topic that if I could just see $5 again, if I could get $5 again for my corn, you have that opportunity right now out to July 25. So I think there are opportunities. The carry has been playing such a role in that to give us even more. So it's been really, really nice to see. And to be honest, typically when we see a rally, the carries do shrink, and we haven't seen that right now, which is a good thing because it's providing us a lot of opportunity for those deferred contracts.
Well, and I think about this too. You mentioned a lot of those deferred contracts, and especially the getting above $5 in corn again. And I've heard some of those same things too. And we know a lot of farmers have plenty of grain in storage right now on the farm. I mean, we've seen that with recent reports. I think about this too, is that this is a time frame where we have to be a smart marketer. And maybe if you've in the past you just elected to sell cash and be done with it and take what the board gives you, that's one thing. But here, managing your risk with some different strategies feels like it almost has to be done in this market environment right now, Christy.
Yeah, I would agree. I have these conversations with my husband quite a bit. One of the things I love about my job the most is that every day is honestly so different. You never know what you're going to get. And every year is so different. So we've come off a few years that, you could sell, be wrong, and still be making money, right? It's not fun, right? You're very upset with yourself that you sold too early, but you're still making money. You're still farming another year. You're still growing that legacy, hopefully for children to come. So you have that opportunity. And now we're into a time frame that it takes a little bit more work. And so you're pulling out those strategies. You're really focusing on basis and carry. You're really focusing on some tools that you can be using where before it was just very easy to pull the trigger and make some sales. That was one of the difficult conversations I had with people about spring wheat. To be honest, a lot of guys are telling me that the current price structure for September spring wheat is not a profitable price right now. And I believe that the difficulty is just because it's not profitable does not mean you shouldn't be doing something about it. And so you have a lot of people right now that have those higher break evens, rent prices increasing. There are still strategies to be done. So just because it's not profitable does not mean that you should be just closing your eyes and hoping for this price to get better. There are a lot of tools that you can be utilizing.
And you should even think forward too. I mean, if you're looking at, maybe you got to think about some fall fertilizer possibly here, getting some of that, or energy needs, or, you mentioned, rents going up, things like that. Like you got to also maybe in the back of your mind too, forecast yourself ahead to what am I looking at initially anyway for 2025, right?
Yeah, and I think those are great strategies as well. And, here's the thing. If you can look at the corn market and say, hey, I can make money somewhere typically around $5. You have that opportunity now for July of 25. December, so not this crop you're planting, but the next one you're planting is not that far off from $5. So we know that that profitability is close, right? That it's very, very close. When you look at soybeans for those deferred contracts, it's not quite there. Those price structures aren't quite there. So if you're looking and saying, what can I be doing marketing wise to make sure my farm as a whole is having a good chance at that, you can focus on corn and say, hey, I'm going to do a little bit here to give me some more time to see if I could potentially get a story later down the road for soybeans. Like I said, soybeans take a little bit longer for the seasonal to happen. We know that there's ample supply in Brazil right now and Argentina for soybeans, so we're kind of struggling on the demand front. Luckily, we were very aggressive with our market or our exports and shipping them out early, which has been great for us to say, hey, we got them out the door. They're not coming back. And so those are the type of things. But moving forward, you are looking at a forecast that many ag meteorologists are still saying you could see hot and dry aggressively by the end of the summer. And I'm not so sure that could really be a problem for corn at this point, but I do think that that is a soybean story. And so if you're starting on some corn marketing, it gives you a little bit of time to try and be patient on when it comes to some soybean downside protection.
Christy Van Sheeseth with Van On and Company joined us here today on Market Talk. Christy, let's go to livestock trade. Cattle futures, a good end of the week with some good gains in both fats and feeders. Cash trade was steady to higher on the week, it seems like. I know, though, that this market it's been beat up by news headlines. HPAI and dairy had an effect midweek. News out that Colombia is restricting beef imports from 8 states where they found confirmed cases of HPAI and dairy, and hasn't been found in U.S. beef cattle, but still Colombia, doing that. They're not a huge importer of U.S. beef, but it's still a country doing that. I feel like this cattle trade has definitely been impacted by the news cycle, but then also too, maybe, figuring out how to quickly move past it, especially with the way we saw Friday's action. Your thoughts on this cattle trade overall right now?
Yeah, cattle feels like a roller coaster right now. I'll have a text message one day being like, we should have been buying those feeders, and then the next day you're like, good thing we didn't buy those. And so it's been all over the place. And I think that's just coming in here and making sure you're doing some form of downside protection when we do see those move together. So this week was a pretty busy week for us as a whole as a company. We made a lot of recommendations, and both cattle and hog marketing were one of those calls that we made this week. We opted to do them in puts. If you're looking at cattle, you could also be looking at LPR. They're pretty much subsidized puts. You could be talking to your insurance agent about that, but those are the moves that we made. There's a lot of stories for both cattle and hogs that can paint a pretty picture moving forward. But the thing is, we don't know these black swan stories, and they seem to be getting aggressive. If you would have told us 1 month ago or something like that we would see these issues that we have with the bird flu and the impact that it's having, the psychological impact it's having on traders, I think that is one thing we just can't account for. So we know that inventory is light. We know that cash is strong. We know that it's there. The demand is there, but sometimes it's just that one story that it doesn't matter if you have everything else lined up, it's going to give this market a go one way or the other. And that's what we're dealing with right now. So we do think it's important to be looking at that downside protection some way, somehow for both cattle and hogs. We saw friendly cash towards the end of the week for cattle, and that's, I think, what gave it that support and able to close higher on the week, especially for the feeder cattle chart. On the weekly chart, I think it was up $7 on the week. So you see those friendly atmospheres. One concern I do have is just the story that we've been selling ourselves for so long when it comes to cattle is the tight inventories that we have, how low it is. I think one thing that's not being talked enough is just how heavy the weights have been for cattle. And that at some point that is going to help offset some of the inventory issues we have. Cash has not really responded to that so far. Like I said, we saw that push on cash towards the end of the week to help support futures, but there's just a lot of risk on the table right now for both cattle and hogs that I think it's important to be looking at something along the way.
And hogs too on Friday. Do you feel like that was maybe some intermarket, spread action, maybe, selling hogs, buying cattle a little bit too? That I got that feeling on Friday's trade as well, Christy.
Yeah, that's a trade we've been part of. So I could totally see where that spread action is part of it as well. And so the spread between cattle and hogs, that is not for the faint of heart, but it's given us some good opportunity along the ways throughout the years. But that is, I think, part of the reason, as well as the fact that managed money, you see where they are right now, especially for the hog markets. And I also just think on the chart, when you look at a chart for hogs, one of the old sayings that was really drilled into our mind as we built our wanting to grow on our technical side of things for trading is to really take a chart and not know what chart you're looking at. Take the symbol off of it and look at this chart and say, what do you see? And not put that bias behind it of the fundamental news or the cash trade behind it or all of that. And when you looked at a hog chart, you were really well beyond 2 standard deviations away from trend. And so I just think that there was a lot of calling to bring some sellers into this market, whether that is related to anything fundamental or not. It just felt like investments wanted to take that short, whether that was just a straight short or whether that was spread trading between cattle and hogs.
All right, Christy, wrap this up, put a bow on it for us here as we close out the show today. Final thoughts, anything you want to mention or reiterate to producers as they're looking across their grain and livestock marketing plans right now?
Yeah, people are probably so sick of hearing this, but work your orders, work orders at the elevator, work orders in your account. I cannot stress this enough. Know where you're at as far as it goes with what contracts you have currently at the elevator or not. The last thing you guys want to be doing right now is marketing. This is something that blows my mind, is that marketing is one of the most important things to a farm's success, but it is the number one thing that farmers do not want to do. And I don't blame them, because it's really a lot of work. And so right now, your focus is getting this crop in. You don't want to be talking about anything else. You don't want to be doing anything else. You just want to get this crop in. So make sure you're working those orders, because like I said, every weekend we are going to have a lot of news being able to change hands, weather really changed hands. So it's important to get those. Right now, targets we're looking at 487 on December corn, 504, 522. Those areas are all ones we're looking at for D's 24. Beans, obviously a little bit further away from where we currently are, but there is a gap up there that we do feel like eventually we should be able to get, and that's around that 1242 or 1244 mark, I believe, on November beans. So that's a target we're looking at, but really more importantly, putting those targets in on wheat and corn at these levels that we're seeing right now.
It is that season. It's weather market season. Definitely a lot to take into account here as we move forward. Christy, great stuff. If folks want to reach out to you and the team there at Van On and Company, how can they get a hold of you?
You can call us at 1-800-648-5494.
And I know you can find them online, vanonco.com. Christy Van On Sheeseth with Van On and Company. Thanks for joining us. Have a great one. We'll talk to you again soon.
Perfect. Thank you.
That's going to do it for the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.